Almost nobody in this country thinks they're rich. Survey after survey confirms it. Ask a room full of Australians where they sit on the economic ladder, and the overwhelming majority will say middle class. Just 1.4% of people identify as upper class. 1.4%. And yet, by almost every measurable standard, millions of Australians are significantly wealthier than they realize. Today, the numbers get laid out in full. How much you actually need to earn and how much you need to own to be considered genuinely rich in Australia. Let's start with an anchor point. The median individual income in Australia, the dead middle, where half the population earns more and half earns less, sits at around $55,619, according to Australian Bureau of Statistics data. That's the true typical Australian, not the average full-time salary figure of $104,765 that gets quoted constantly in the media, because that number is deeply misleading. Around 75% of Australians earn less than the average full-time salary. Why? Because averages get dragged up by the highest earners. The typical full-time worker earns closer to $90,000, and once part-time workers are factored in, that drops further to around $67,786. So the media's constant reference to a six-figure average salary gives most people a completely distorted picture of where they actually stand. Now, here's where it gets really interesting. What does it actually take to break into the top 10%? Top 5%, and the elusive top 1%. These aren't just abstract numbers. They represent fundamentally different financial realities, and knowing them changes how people think about wealth, tax, and aspiration entirely. To crack the top 10% of individual income earners in Australia, the threshold is approximately $150,900, according to ATO taxation statistics from 2022-23. That's a level reached by senior professionals, senior engineers, doctors in private practice, finance managers, tech specialists with several years of experience. And yes, by that measure, the majority of Australians reading finance content online have significantly underestimated how close or how far they actually are from this tier. But the top 10% is just the starting point. To reach the top 5% of individual earners, the number climbs to approximately $189,178, according to Grattan Institute analysis of ATO and ABS data. At this level, you're talking about senior executives, established medical specialists, high-performing lawyers, and those in financial services with serious performance bonuses. Household income at the top 5% sits around $305,938, a two-income professional household with both partners earning well. And then there's the number that genuinely shocks people, the top 1%. To be in the top 1% of individual income earners in Australia, you need $375,378 per year. Household income at the top 1% is $531,652. Let that sit for a moment. These figures come from Grattan Institute research, drawing on ATO and ABS data, and they reveal something striking about the shape of Australian income distribution. The gap between the top 10% and the top 1% is enormous. More than $220,000 in individual income separates these two groups. That gap reflects capital income, business ownership, executive packages with equity components, and the compounding effect of decades of wealth accumulation. And the bar keeps rising. The comparable figures in 2019-20 for the top 1% were $315,770 in individual income and $460,028 in household income. That means the thresholds have risen approximately 19% and 16% respectively in just 5 years. The rich aren't just getting richer in absolute terms. The entry price to the top tier is accelerating faster than ordinary wages. There's important context in the state-by-state picture, too. Western Australia has the highest proportion of taxpayers in the top tax bracket, those earning over $190,000, at 5.5% of all WA taxpayers. The mining sector's gravitational pull on wages shows up clearly in this data. New South Wales and the ACT aren't far behind, but even in high-wage Sydney, only around 7% of Sydneysiders earn enough to land in the top tax bracket. The top tax bracket, which many people use as a mental shortcut for rich, captures far fewer people than the public imagination suggests. Now here's the part where income alone completely fails to capture what rich actually means in Australia. Net worth, total assets minus total liabilities, tells a completely different story, and it's a story that income figures can't capture at all.
The average household net worth in Australia was approximately $1.56 million in 2024-25, according to KPMG analysis of ABS national accounts data. But just like the income average, this figure is heavily skewed by those at the very top. The more meaningful number is the median, and it tells a very different story. Australia's median household net worth sits around $700,000. That's the middle of the distribution. Half of Australian households have less, half have more. And critically, around 57 to 70% of that wealth is tied up in property and superannuation. The ABS data shows that residential land and dwellings alone make up over $11 trillion of Australia's total household wealth of roughly $16 to $17 trillion. Strip out the family home and super from most Australian households, and you often don't have a lot left. Liquid, accessible, investable wealth is far more concentrated than gross net worth figures suggest. The breakdown by age is where things get genuinely eye-opening, because wealth isn't distributed by income, it's distributed by time. A 32-year-old earning $180,000 a year and a 60-year-old earning $80,000 a year can look completely different on an income ranking, but wildly different on a wealth ranking in either direction, depending on what they've done with the money and how long they've had the property market working for them. Grattan Institute data breaks down what it takes to be in the top 1% of net wealth by age group, and the numbers are staggering. For households with a reference person aged 25 to 40, being in the top 1% requires a net worth of $3.1 million. That means property with significant equity, likely multiple assets, share portfolios, and superannuation already well ahead of peers. For households aged 41 to 64, the peak earning and accumulation years, the top 1% threshold leaps to $7.7 million. At this stage, multiple investment properties, self-managed super funds with substantial balances, business ownership, and equity portfolios combine to define genuine upper-tier wealth. And for households aged 65 and over, the top 1% threshold reaches $10.9 million. A paid-off family home, even a highly valued one, barely scratches this level. This is multi-property ownership, significant share market exposure, and superannuation balances well above the general transfer balance cap. Above these tiers, there's another layer entirely. Research from the UBS Global Wealth Report estimates approximately 42,000 Australians have a net worth above 16.6 million Australian dollars. And at the very tip of the pyramid, there are 46 Australian billionaires, a number that includes household names from mining, property, and retail. Here's what makes Australia genuinely unusual in the global context, though. Median wealth per adult in Australia was approximately $262,000 USD, or roughly 394,000 Australian dollars at 2023 exchange rates, according to the UBS 2024 Global Wealth Report.
That puts Australia second in the world for median wealth per adult. Only Luxembourg, a country with a population of under 1 million, ranks higher. And the global comparison is where the perception gap becomes most dramatic. The UBS data shows that 82.3% of the world's adult population has a net worth below 100,000 USD, 82% of the planet. If an Australian owns a home, even with a mortgage, and has a meaningful superannuation balance, they are quite literally wealthier than the overwhelming majority of people alive on Earth today. That's not a motivational statement. That's what the data shows. So why doesn't it feel that way? The answer lies in something deeply human and deeply Australian. Wealth is perceived in comparison to peers, not in comparison to the global population. An inner Sydney professional earning $160,000 a year, paying a $4,000 per month mortgage in a suburb full of people who seem to be doing even better, doesn't feel rich. The comparison set is everything. Relative wealth creates feelings of scarcity, even when absolute wealth is substantial. There's also a structural reason Australians feel poorer than the data suggests they are. Australia's cost of living, particularly housing costs, is genuinely among the highest in the world. Having $700,000 in median household net worth sounds impressive, but most of that is tied up in a property that generates no income and requires ongoing servicing. The month-to-month cash flow reality for millions of middle-income Australians is tight, regardless of what the balance sheet says. And there's a generational divide that the aggregate numbers completely obscure. KPMG analysis shows that average household wealth surged 23.6% in real terms between 2019-20 and 2024-25 for those who already had assets, while median wealth for all households barely moved, staying around $700,000 in real terms over the same period. The asset owners got dramatically richer. Those without assets essentially stood still, in real terms. That divergence is the core engine of wealth inequality in Australia today. The conclusion that the data points to is this: rich in Australia is not a fixed destination, it's a moving target, set partly by objective thresholds and partly by the psychology of comparison. By income, the top 10% starts at around $150,900, the top 5% at around $189,000, the top 1% at $375,378. These aren't numbers most Australians will hit, but far more will get closer than they expect. By net worth, the picture is overwhelmingly shaped by age, property ownership, and time in the market. A paid-off home in a capital city already puts older Australians in remarkable global company. By global standard, owning a home and having superannuation in Australia places the holder in the wealthiest 20 to 25% of the entire planet. The financial stress that millions of Australians feel isn't a sign that the data is wrong. It's a sign that wealth is experienced locally, not globally. The comparison happens at the dinner table, in the school car park, on social media, and in the suburb. And in those contexts, the gap between perception and reality is where most financial anxiety actually lives. Rich is not a feeling, it's a number, but only once a reference point is chosen. Set clear financial goals, measure progress against your own trajectory, and use the actual data to calibrate where a position really sits on the ladder. Because the numbers, honestly read, reveal a country that is wealthier than almost anyone in it is willing to admit.